So once again, welcome everyone. My name is Patricia Njeri. I'm the Membership Engagement Manager at Gogla, and I will be the moderator for this webinar. During this webinar, we'll be presenting key findings from the latest edition of the Global Off-Grid Solar Market Report. So we have quite clear agenda for this webinar. You will hear from the report authors on our panel today, what their key takeaways from the latest round of the sales and data collection for the period July to December 2021 is. And also we'll have a bit of a Q&A at the end of this session. So how you can take part in this webinar, and of course a bit of housekeeping. You can submit your questions via the Q&A section, which is shown at the bottom of your screen. Feel free to target your question to a particular panelist. I'll be introducing the panelists shortly. And you can also upvote another participant's question. So if a question is asked similar to what you wanted, feel free to upvote that participant, your fellow participant's question. And also kindly note that we will record this session and the recording will be shared afterwards. If you're experiencing any problem, you can't hear someone speaking, you can't see the video or the presentation being shown, please notify us via the chat function at the bottom of the screen. Because of the volume of attendees, we'll be muting everyone, so you'll be muted during the entire webinar. And please note, for the questions, you're free to submit them at any point during the presentation. Before we get started, we'd like to run a quick poll. So the purpose of this poll is to understand the composition of our audience. So in a minute or so, you will see a poll pop up on your screen. So please select the answer that best describes the organization. So I'll be running the poll in a few seconds. So these are the options available. Thank you for your submission. I'm ending the poll in another few seconds. So that is the composition of our audience today. Primarily, of course, companies in the off-grid sector, followed by our investors and development agencies. So thank you so much for taking part in this. We appreciate your responses. Thank you. All right, moving on, I'll be introducing our panel for today. So in our panel today, we have Oliver Reynolds. Oliver is the Market Insights and Data Manager at Gogla. And then we have Susie Wildon. Susie is the head of communications and insights at Gogla. She's stepping in for Joanna Gallan, who is from Lighting Global SMAP, the Lighting Global SMAP team. He's come down, unfortunately, with COVID this week. So Susie will be stepping in for him. We also have Joseph Thomas. Joseph is the Assistant Evaluation Manager at Energy Saving Trust. And last but not least, we have Riley McDonald. Riley is an associate at CLASP. So over to you, Oliver.
Thank you, Patricia. Hi, everyone. So I'll kick off this round of key insights from the report. As Patricia mentioned, I'll start off with giving a bit of a global view of what we see on the lighting product side or solar energy kit side, so solar lanterns, multi-light systems, and solar home systems. So we see global sales volumes reported by affiliates for the second half of 2021 have reached 3.97 million, so close to 4 million, not so far away from where we were not long before COVID, as you can see on the left-hand side of the chart. This represents a 15% growth compared to the first half of 2021. This can be in part due to seasonal factors, but it's still overall, as you can see, since COVID hit, a positive trend. If you look to the rest of the chart, we see cash sales and pay-go sales. So cash sales have also grown compared to the first half of the year by 8%. But it's especially in pay-go that we've seen an important growth in volumes, with a 27% growth compared to the first half of 2021. And pay-go sales volumes are actually at the highest that we've ever seen, with over 1.5 million units sold within the last 6 months of 2021. So overall, if we look at the big picture, what we see is kind of a recovery, a path to recovery, a slow one, a bit of an uncertain one. But if we look just at the big numbers, it's rather encouraging. However, as we will deep dive a bit during this presentation, but especially if you look at more in detail in the report, what we see is that this recovery is quite uneven. This recovery is uneven in terms of the different markets, and we'll be able to talk about that in this presentation today a little bit. Depending on which parts of the globe and which countries in particular you look at, the path to recovery is more or less obvious, but it's also different from one company situation to another. If we look at the data that we have through this collection exercise, what we see is that if you take companies that reported sales in the second half of 2021 and that were also reporting sales to us in the second half of 2019, just before the effects of the COVID pandemic were felt, about half of them are reporting higher sales now than they were before the pandemic in 2019, when the industry had recorded its highest sales ever. But about the other half, though, are still reporting lower sales than they had 2 years ago. So while this definitely doesn't paint a full picture of different experiences that companies have, it does show that there's already quite a vast discrepancy between where companies might stand now compared to 2 years ago. So although the global headline is rather positive, there's still also quite a bit of uncertainty. We've seen the effects of COVID kind of trail away over the last 6 months, but there's a lot of uncertainty that remains for 2022. We see potential effects of lockdowns in mainland China might still affect supply chains in 2022. And obviously the inflation that's been aggravated by the situation in Eastern Europe is likely to also have effects on the markets. So although we see positive signs in the figures, we also want to strike a slightly moderate tone, as you'll see in the report, and just to give you the explanation of why that is. But now I hand over to Susie, who will start digging into the data in more detail.
Thanks, Oliver, and welcome everybody. Indeed, I think that insight that Oliver just shared around pay-as-you-go solutions and that increase in sales that we've been seeing is particularly interesting. I think obviously the pandemic's been hitting the sector very hard and in a variety of ways, but the pay-go has managed to sort of keep moving forward throughout that time. And one insight that we are definitely seeing, and we have been seeing for a little while, but we feel merging into a bit more of a trend, is particularly increasing sales in the solar lantern segment when they have got that pay-go opportunity within them. And we think this has been driven by perhaps a number of different factors, availability being one, but also in relation to affordability, where of course we're seeing within the pandemic a number of homes and businesses really being hit hard by the impact and the economic impacts. And we already had a challenge of affordability for millions of households around the world who are really spending very little on energy to date, and so have only a small amount of funds that they can move to modern energy solutions. Where we're now having pay-go solutions in the smaller technology ranges, we're of course then able to see those customers have a smaller down payment and smaller repayments to pay off those solutions over time. And we can see here already in June, the end of 2019, we were seeing 140,000 sales of those, whereas in the last half of this year, so 2 years later on, we're actually not so far off 500,000 sales of those particular technologies in just 6 months, which is quite exciting if you think about that potential of these technologies to help to address that affordability challenge for very low-income consumers. And another interesting insight here, although we don't have all the data on this, but we're certainly hearing, and we've had illustrative data from some of our companies around the fact that some of these solar lantern customers, when they're buying their products on pay-go, and then building that relationship with those companies and building perhaps a credit history with them, and then able to, once they've paid off that lantern, they now then own it outright and have the benefits of that ongoing, purchase a larger system, perhaps a multi-light kit or a solar home system, potentially then even moving on and up the clean energy staircase to purchase appliances and other products as well. And so we think that this is quite an exciting trend. Hopefully it will continue, where we're able to have a product that can help us to address that affordability challenge, but also set off many more people along that clean energy staircase and along that clean energy journey. So yeah, indeed, it remains to be seen, how this will come about, which parts of the world we'll see this in, perhaps more than others, but certainly very interesting from both of those perspectives. And I think, yeah, indeed, unlocking, obviously through that pay-go model, that introduction, these higher energy services, but appliances and beyond energy products as well over the fullness of time, because customers are building up that credit history and therefore able to move up in terms of those product segments, as well as perhaps giving companies the comfort that they're able to resell or cross-sell products to consumers they know are able to repay them, mitigating the potential challenge of overburdening a customer with a higher repayment rate for a higher model. So obviously sort of helping to build up that credit history with the customer and that relationship as well. So with that, let me hand over to Joe.
Brilliant, thanks Susie, and hi everyone. So Riley and I will be presenting insights into the key appliance sales in the second half of 2021. And when we talk about the key off-grid solar appliances, we're referring to the 4 appliances that you can see in the slide. So that's TVs, fans, refrigerators, and solar water pumps. And so the first insight that I'll be presenting is the global insights for each of the key appliances. So overall, there's been a slight decrease in sales compared to the first half of 2021 for all appliances. And overall, figures remain significantly lower than pre-COVID levels. In total, 338,000 key appliances were sold globally, which is a decrease of 20% compared to the first half of the year, and a decrease of 27% compared to the second half of 2019. The total volume of key appliances sold between July and December 2021 is the lowest reported since the second half of 2018, which is when appliance data was first published. Regarding the reason for this, anecdotal reports from the industry indicated that this is partially a reflection of the low volume of sales of solar home systems, which are often bundled with TVs, fans, and refrigerators. And this decrease in overall sales is also a likely consequence of the general economic downturn in consumer spending that has led to fewer purchases of larger standalone and productive appliances. And then this, compounded with higher shipping and freight costs, is also likely to have impacted appliance sales. So if we drill down into each of the appliance types, the charts on the slide show the sales of each appliance in sales periods as far back as the second half of 2019. And the grey bars in the charts show the sales volumes for the second half of 2021. So if we take a look at TV specifically, 196,000 TVs were sold in the second half of 2021, which is a 1% increase compared to the first half of 2021. And industry insiders have informed us that this stagnation of TV sales was in part due to supply chain issues, such as chip shortages and increased costs of LCD display panels. And this has led to product shortages and increased prices. For fan sales, there were 134,000 units sold in the second half of 2021. And this is a 38% decrease compared to the sales reported during the first half of 2021. Although this decrease may be caused by fewer fan manufacturers reporting in this round, insights from the industry attribute this decrease to two key factors. The first being seasonality, and the second, increased prices for fans in South Asia. And Riley will dive deeper into these factors later on. And then regarding refrigeration units, over 2,200 units were sold globally between July and December 2021. And after remaining fairly stable for 3 consecutive reporting rounds, refrigeration unit sales dropped by 45% compared to the first half of 2021. This is the largest relative decrease and the lowest sales volumes reported since data collection began in 2018. And this could be partly attributed to a low number of companies reporting sales data for refrigeration units in the second half of 2021. In addition to this, anecdotal insights highlight the increased cost of materials and transport for what are already expensive appliances as a factor for lower sales. And this is all occurring at a time when household finances have been constrained. And then finally, if you look at solar water pumps, they experienced a 3% increase in sales compared to the first half of 2021. And solar water pumps represent 2% of all off-grid appliance sales. And due to a spike in sales caused by government programs in South Asia, solar water pump data is not comparable with the second half of 2019. And although the sales of solar water pumps are not closely tied to the sales of solar home systems, like the other key appliances, high upfront costs for solar water pumps remains a barrier to mass adoption. I'll now pass you on to Riley, who will discuss her first key insight.
Thanks, Joe, and hi, everyone. So as with the previous sales data reports, we also look at appliance sales by country. So one of the key findings that I thought was interesting that in the second half of 2021, we found that all appliance categories had the same country as their top market compared to the first half of 2021. And before I go into these country level findings, I wanted to highlight that for some of the appliances, you won't see any specific numbers or data on appliance sales from different countries. And this is because of the 3 data point rule. I think a lot of you are probably familiar with it, but if you aren't, basically we only include data on a specific region, country, or product category if we have at least 3 separate product manufacturers reporting data. So that's why you'll see some of those numbers excluded. We're also working to recruit more appliance companies to report sales, especially for PUE products, so then we can report these specific numbers in future reports. So now diving into the country and product specific findings, first looking at TVs. So Kenya was sold the largest number of TVs in the second half of 2021. They sold over 74,000 units. This is unsurprising. The appliance market in Kenya is primarily dominated by TVs, and it equates to 96% of Kenya's key appliance sales. However, Kenya also reported its lowest TV sales since the first half of 2019. Since most of the TVs are bundled with solar home systems in Kenya and also in East Africa more generally, it's not surprising that TV sales decrease in line with the decrease we saw in solar home system sales. However, the TV sales volumes decrease at a faster rate than what we saw for solar home system sales. Next, looking at fans, we saw that Pakistan was the largest market for fans, but unfortunately we can't report on the sales data for Pakistan because of the 3 data point rule. However, it's very interesting that Nigeria was the second highest market for fans, and they sold over 21,000 units. This is a 53% growth in sales compared to the first half of 2021 and 117% growth compared to the second half of 2020, so a year earlier. Most of these fans were sold within SHS, and so the growth in sales can at least partially be attributed to the growth that we saw with the SHS market in Nigeria. And this was supported by different government funded programs such as the Solar Power NIGA program, which aims to electrify 5 million homes through solar home systems and mini grids. Additionally, the government responded to the pandemic with different removing gasoline subsidies and adjusting electricity tariffs to be more cost effective. So we also saw that this had an impact on the SHS market and then fan market more generally. Nigeria was also the largest market for refrigerator units in the second half of 2021, though we can't report on the exact sales data. This is also the case for Vanuatu, who had the second highest number of refrigeration units sold. And then Senegal was the third highest with 375 units sold, which is more than a 50% increase compared to the first half of 2021. And then for solar water pumps, Kenya is the top seller. However, due to the 3-point data rule, we're unable to report on any sales figures for these 5 countries. And now I'll pass it over to Oliver.
Thanks, Ray. So before I dive into my slide, I just wanted to follow up on something because I realized that Joe and Riley both referred to the solar home system sales, and we didn't necessarily say a lot about them in the beginning. But indeed, one of the things that we see, especially in East Africa, is that the recovery and growth, as Susie mentioned, it's in part linked to PAYGO sales of smaller products, but in general, it has been driven by rather smaller lighting products in terms of the overall range, whilst the larger solar home systems that are above 20 watt peak, they would typically be able to power bigger appliances or appliances that are TVs or fridges, haven't yet seen the same kind of recovery in that region. And I'll use that to segue into my countries in East Africa insight. So essentially, if you read the report, you'll see that the picture in East Africa is a bit mixed. So sales in East Africa grew 4% over the last 6 months compared to the first half of the year. But while PAYGO sales in East Africa are up, cash sales are actually down compared to the first half of the year. And if you start looking at the countries, then it's a lot more, there's a lot of disparity between markets. So we see mature markets like Kenya, or markets that have been significant in terms of lantern volumes over time, like Ethiopia, struggling to return to growth. It's also with Kenya seeing actually a 21% decrease compared to the first half of the year in its sales volume. Ethiopia also sees a 13% decrease, although given the conflict in northern Ethiopia and Forex issues, the picture there is also a bit more complex. And then we also see Tanzania, where we see a 7% decrease in sales compared to the first half of the year. So there is that a few of those countries that have been strong East African markets that are struggling a bit more to return to growth or to recover to the extent that we would hope at this stage. But on the other hand, we have a whole set of maybe more nascent countries that are performing really strongly through the fact that there's a lot more untapped opportunities or through programmatic support. And there's 3 countries that we've highlighted on this slide, which are Malawi, Mozambique, and Madagascar. So Malawi, you can see obviously a very seasonal reporting from between 6 months periods, with high sales happening in the second half of the year in a very obvious way here, but also a very strong positive trend. And we can also, that's actually 157% growth technically between the first and second half of the year. Mozambique, similarly, very strong growth compared to the previous half year, was a plus 143%. And Madagascar, stable year on year, but second half of 2020, second half of 2021. But then if you look at the entirety of 2021 compared to the entirety of 2020, we see strong growth. And maybe what's interesting here, especially for Mozambique and Madagascar, is that this also shows the potential that programmatic intervention and government support can have for access to energy, especially in times of uncertainty and times of potential hardship for households. With in Madagascar, the Off-Grid Market Development Fund, funded by the World Bank, which has had an accelerating role, catalytic role in getting more and more solar home systems and more quality verified products into the Madagascar market. And we also see the BRIO program in Mozambique, funded by CDO in Sweden, which provides grant funding, result-based finance, TA, having a strong supporting role in the acceleration we see in Mozambique. And in Mozambique, actually, there's quite a few other supportive interventions. Just to cite one other one, the GIZ FAZER program, which is in has been gone through a number of iterations already, but it's also played a part in supporting what we see in Mozambique. And with that, I'll hand over to Susie for a look at a different part of the world.
Thanks, Oliver. Yeah, indeed. I'm going to dig in a little bit to specifically on Nigeria, but just to say across West Africa, we did see continued growth in that region. But similarly to East Africa, it's quite a different picture depending on what country you look at. And similarly, again, where we've seen that sort of government support, programmatic support, or indeed perhaps a company opening new operations within a particular country, that's translated then into upticks or changes within those particular countries and regions. So probably similar dynamics going on to some degree in West Africa as related to East Africa. But really, and perhaps as Riley alluded to, a lot of the growth in the region is being driven by Nigeria. And here you can see that aside from a bit of a dip, if you look to the left-hand side of the charts here, of course, in that first part of 2020, when COVID first hit, the growth trajectory, if you miss out that 6 months, is continuing. And within this last 6 months, there's been really quite a significant leap with a 62% increase in that period of time alone. And you can see here as well that cash was relatively stable until this jump in this last 6 months, and that pay-go has been sort of increasing steadily and certainly surely through that period of time as well. And maybe to dig in a little bit to the dynamics that we're thinking are coming into play here, of course, it's a hugely attractive market. There's a lot of people who are unelectrified. There's a lot of need and demand, of course, that means for people to get these solutions. Companies have therefore been drawn to the country, and local companies as well have very much sprung up as part of the ecosystem within that to meet that demand and to increase energy access for the people in the region and the country. But we're also seeing, indeed, I think as Riley related to, a lot of government support and programmatic support as well, with the government having integrated some off-grid solar aspects into their electrification planning. We're seeing now that the contribution of an RBF scheme running in the country may have helped connections of over 150,000 in the last 6 months alone. We're also seeing the beginnings of impact from the Solar Niger program, although that's still building up as we speak. There's been some fiscal support specifically around solar home systems as well. And indeed, as Riley mentioned, that has led then to perhaps an uptick in terms of appliances for the country indeed. So Nigeria really driving growth within the region, a really strong story, I think, in terms of what a specific support from government and programmatic, as well as that company competition can look like over a time period within a particular country, even despite the challenges that COVID has presented. Perhaps in some ways reaping some benefits of that, in that indeed the subsidies on gasoline and diesel being removed because of the pandemic, as well as some changes into the tariff rates in the electricity system as well, making off-grid solar therefore more competitive when comparative to those traditional solutions. But indeed, we're really hopeful that this trend obviously will continue and keep moving forward, given the huge energy So with that, I'll hand over to Joe.
Brilliant, thanks, Susie. So my second insight will take a look at TV sales in East Africa, and I'll discuss these with and without Kenya. So the key message here is that TV sales have slightly decreased in East Africa. However, if Kenya is excluded, then TV sales in the region are actually growing and are the highest they've been since before the COVID-19 pandemic. So to give an overview of TV sales in East Africa, between July and December 2021, the total recorded number of appliances sold in East Africa reached 123,000 units. And this is a 5% decrease compared to the first half of 2021, and a 35% decrease compared to the second half of 2019. And appliance sales in East Africa represent 50% of total appliance sales in sub-Saharan Africa. And this is down from 54% in the last reporting round. Lower sales in Kenya are the main reason for the lower sales in the region, as it is by far the largest market, and no other market has been able to compensate for this decrease in volumes. And the chart on the right-hand side of the slide shows how sales have evolved in East Africa with and without Kenya. So when excluding Kenya, it appears that TV sales are actually recovering in the region. So as shown in the chart on that right-hand side, TV sales in East Africa, when excluding Kenya, are the highest they've been since the second half of 2019. I think it's also important to note that the decrease in TV sales in East Africa is also linked to a lower pay-go solar home system sales. So as the vast majority of appliances in this region are sold bundled with solar home systems, and all cash sales did increase slightly, but they didn't increase by much. Another factor that's been previously mentioned is supply chain issues. So anecdotal evidence suggests that supply chain issues created by the COVID-19 pandemic has led to disrupted supplies within countries and increased prices. But then to end on a more positive note, some of the key markets in East Africa that are growing include Malawi, Mozambique, Rwanda, and Uganda. And the reason for this growth varies depending on the country, but local program interventions which support the off-grid sector have likely boosted TV sales in the region. I'll now pass back to Riley, who will present the final insight.
Thanks, Joe. So we saw that fan sales decreased pretty significantly by 38% between the first and second half of 2021. And this decrease also contributed to the overall decrease that we saw in appliance sales globally. There are three key reasons for this decrease in fan sales. First, we saw that fewer companies are reporting data on fan sales compared to previous rounds, particularly Bangladeshi companies. Since 99% of South Asia's appliance sales were fans, this has significantly contributed to the decrease in the overall numbers of sales. Secondly, we typically see a lower number of fans sold in the second half of the year since fans are purchased during the hottest months. So in the first half of the year, distributors will typically build up stocks in anticipation of higher and more humid temperatures. We've heard from companies that fan sales operate basically on a pre-booking system, which means that distributors will purchase fans in bulk quantity in the early part of the year, and then they'll sell their stock to end users from March onwards. So yeah, just the seasonality, which we'll typically see for the second half of the year. And then we also saw an increased price for fans in South Asia, where shortages and increased prices of raw materials such as aluminum and copper is compounded with inflation in key markets. So this is increasing prices and also reducing consumers' ability to pay for fans, which we saw reflected in the decreased sales data. And then lastly, India is the third biggest market for fan sales, and it's been particularly hard hit by the pandemic. Many companies are struggling with supply chain disruptions and COVID-19 related restrictions. We heard from companies that there are some positive signs from distributors that the market is starting to recover, but there are still some remaining supply chain issues that are causing this drop in sales. And now I'll pass it off to Patricia for the Q&A.
Thank you, Riley. Thank you all our panelists for your key takeaways and your key insights. Now we are almost at the tail end, moving to the Q&A section. So just a kind reminder, if you still have questions, feel free to type them out as we address the ones that we already have here. Oliver, I think we'll start with you. Matthias Nathan from Total is asking, do you have an explanation regarding the still strong activity in Malawi?
Yes, thanks. Yeah, Matthias, so there's probably a mix of elements. So one thing is we do see some elements of support from the Malawi government for the sector. It's kind of early days, but we expect that will continue to support. What we've heard from the industry, those present in Malawi at this day, is that there's still quite a lot of opportunity in Malawi. There's still a lot of untapped potential that companies operating in the market are able to reach. So there's still essentially it's still a commercial expansion phase for many of the players we were able to talk to. So I don't have any great answer in terms of exterior factors. or interventions that are supporting the market. But essentially, yeah, that's what we've heard back from the market. But I see you have a couple of other questions in there, Matthias. I'll take them in stride and then redistribute part of those questions to some of my co-panelists. There's a question in there. Your first question was around household appliances and trying to explain the decrease in sales that we see for those appliances as opposed to let's say more productive appliances. Indeed, I mean, it's true for solar home systems, and therefore it's true for the appliances that are typically sold with them. We do see lower sales of household appliances and lower sales of larger solar home systems because due to loss of income that is extremely slow to recover in many of the target markets, households have less money to spend or have to make harder decisions about how they're spending their money. And this leads to focus on on necessities and on potentially just lighting and phone charging, whereas with more ability to pay, they might have looked to expand to larger products. And I'll just switch to the last question from Matthias, but after that, Joe and Riley, feel free to jump in if there's anything you'd like to add. And there's a question from Matthias as well about Nigeria. If we consider that the NEP government program is already playing a high role in what we're seeing in the market. And essentially the answer is yes, we do. So I think there'll be some data in the report. To be very honest, I was on leave last week, so my short-term memory of what's actually in the report may not be at its freshest, but I believe there's data in there on the exact numbers of the World Bank RBF in Nigeria and what impact that's had in terms of the volume sold in Nigeria.
Yeah, just to jump in on that, Oliver, it's I think it's over 150,000 specifically, and I don't know the exact number, but I think we tend to see as well that even if there's some elements of programs that are still building up, the idea that a government is going to be backing and supporting the sector and can help with companies' decision making when they're looking at the strategies about what they might do in particular countries. And unlocking markets. So I think we're now seeing those more specific numbers indeed actually coming through that we could have more tangibly relate to the program. But I think in general, sort of support from governments and from programmatic partners in particular countries is in and of itself catalytic. And then obviously when those really start to implement and come through, we begin to see the benefits much more wholesale. Back to you though, Oliver.
Thanks, Susie. Yeah, Riley or Joe, was there anything you wanted to add on the appliance question, or do you feel it's been covered?
Yeah, I'd just add what we saw for fans. The section I presented on was, yes, we did see, with increased cost of materials as well as ability to pay. That was also part of the reason that we saw a drop in fan sales. So yes.
Thanks, Riley. I see there's a question in the chat about sharing the content, and yeah, just to confirm that you will indeed receive at the latest early next week by email the slide deck and the audio will be made available, the recording will be made available as well through a link. In addition to that, obviously, you can find the report on our website, but Patricia will show the correct link onto our website on the final slide when we close off this session.
There's also a question from Felicity, which I'd be happy to answer. She mentioned refrigeration units and solar water pumps are lower in general than smaller, cheaper appliances. What is the potential size of these markets? That's a great question. So one of the main reasons that these sales volumes are so much lower for these products is mainly because of affordability. They're out of reach for most off-grid consumers. We released the State of the Off-Grid Appliance Market report in, I think, 2018, where we shared specific numbers for the potential size of these markets. We're currently working on updating the potential size of these markets in a new report. And so I can share that existing report with you all so you can see the existing projected numbers, and then the market trends report. I'm not sure when exactly we're planning to release it, but I think it's fairly soon. So Felicity, I can reach out to you via email and share that with you.
And just to add, I think the market trends report should be towards the end of July that updated assessment will be completed. So yeah, not too long, but yeah, the current one that Riley has, I think will probably be the best for the moment.
I see another question on refrigerators come in from Brian regarding commercial versus household, maybe a bit of a methodology, sorry, input here. So in the current format of the sales data collection, we only look at refrigeration units that are not that are kind of household size or very small business size. So technically we're excluding all these walk-in refrigeration units. So that's part of the answer. The second part of the answer is that honestly, we don't necessarily know what the use case is for the sales that we record. So if the product is eligible for the data collection, so a non-walk-in refrigerator, whether it's a chef refrigerator or a stand-up refrigerator, unless it's specifically designed for one of those segments, household or commercial, we would not be able to tell you what that means in terms of the numbers. But if on the efficiency for access team, either of you has any additional insights as to this topic?
Yeah, we typically see that most of the refrigerator sales are related to, or most of the consumers in recent surveys that we've done use their refrigerator for commercial purposes, so mainly for selling like cold beverages, as you mentioned. And there's a smaller market for household refrigerators. So that's a quick answer to that question.
I think maybe to build on what Riley's mentioning there from the refrigerator side, I think often with technologies, and certainly from research we've done around use of solar home systems in East Africa in particular, but also seeing that in West Africa and South Asia, a lot of people might find that they would also try to, create some relatively beneficial impact in terms of additional income through their system. So I'm not surprised at all, Riley, that you mentioned that most households are really, or most customers are using them for some level of commercial enterprise given the higher price point. I think even on the solar home system side, we've seen that customers who might buy those products and technologies might also use them for some level of enterprise, with around, I think, over 20% of customers in East Africa doing so. So I think in terms of these products having those additional benefits in terms of productivity and income generation, and particularly those at the higher price points where there's this particular opportunity for productive use, I think that's seen across the market, and it's sort of a testament, I think, to the use of those products by the different consumers that have them.
Any other questions? I think the panelists have addressed all the questions. Are we missing something?
No, I think we've addressed all the ones in the Q&A. Unless there's any last-minute questions that come in, I think we can move towards the close.
Okay. So also on the presentation, you'll see Oliver's email address. So in case you have questions or you just need some guidance, feel free to reach out to him. So kindly, before we close, would like your feedback on how this session was, how insightful it was for you. So kindly, please just take a minute to fill out this second poll, we'll appreciate that. Thank you. So thank you for your submission. I'm closing the poll in a few seconds. Anyone else wants to submit? All right, thank you for your feedback. We do appreciate that you found this webinar quite insightful for you. We do agree we couldn't put everything that's contained on the report in this webinar, otherwise we'd be here for hours on end. So we'll have the public reports available on our website, sharing that shortly. So thank you for your submission. On to the very last slide. So of course, that is the a top page of the annual report for the period July to December 2021. As Oliver has mentioned, you want to read or see the reports in greater detail, please visit our website. You can see the report page there. You can also view our Impact Hub. And if you have further questions, please contact Oliver, who is our Market Insights and Data Manager. That is his email address. As mentioned, we will share the recording and also the presentation that we have shared today. So thank you so much, the panelists. Thank you, the attendees, for attending, and thank you, the panelists, for also presenting your key insights. We all have a good morning, and for those who it's evening, afternoon, have a good afternoon.
Thank you.
Thank you.
Thanks, Phil.
Thanks, everyone.